Welcome back to Market on Close. It's time now for overlooked stocks, and for that we welcome in Tsilis, Senior Markets Correspondent. We're looking at Premier after a big rally today, and that came off the back of the earnings. Tell us more about this one, George.
Yeah, it was a nice actual couple of weeks for Premier and hitting new 52-week highs today. But there was a catalyst. I'll go over the numbers in just a sec. But this is essentially a small cap company. It's about $2 billion market cap, and it's in the healthcare services and equipment space. They have things like supply chain services, which provide things like medical supplies and equipment for labs and food and nutritional supplements for clinical settings, but also they do group purchasing for helping optimize smaller clinics in terms of getting pricing power from some of their suppliers. But they also have their performance services division, so that includes technology, software as a service, which provides clinical software optimization and financing, as well as reconciliation for accounts. So they help to deal with administrative aspects of healthcare services alongside the supply chain issues. But they did post earnings, and if you look across the board, they were actually good compared to the estimates. They posted 46 cents versus the 34-cent estimate, so they beat it by about 12 cents. And sales were posted around 258 million. Now, those sales were down about 11% year over year, but nonetheless, they did beat the estimates by a fraction. And the reason the sales were down is that the company actually went through a divestiture of a certain segment of their business. But the company also has made some strategic acquisitions over the past few years. And one of the aspects of their business, it's been growing quite good. At least their stock price has been in the last year. If you take a look, it's higher by about 33%. And some of the other aspects of the healthcare services space right now is all about optimizing cost effectiveness. We can see that companies like United Healthcare, for instance, are doing poorly because of the fact that healthcare costs are high and they're outlaying a lot of capital. But there's also a defensive component to this name today, considering it's in the healthcare services space. But some of the competitors, actually the mainstay competitor for Premier is Cardinal Health. And one of the things I noticed is in the last year, Premier is caught up in terms of price performance to Cardinal, even though in the last 3 years it's been underperforming Cardinal. And I think in the last year, there's quite a catalyst that's been going on. First off, if you looked at the diluted weighted average share count on a trailing basis at around 97 million shares, just going back a few years, the company's been buying back shares quite aggressively, over 20%. But today, and I think this is also the driving catalyst for the price movement today, was that they denoted that they were going to reduce that share count to 82 million. This is what they talked about in their conference call notes. So that's another 15% share acquisition. And then last year, they also issued about $300 million in debt. So this is a story of a company that's been growing through organic means, but also inorganic means through acquisitions and specific divestitures. But they've been buying back shares quite aggressively. And I think that's also sort of a Premier, no pun intended, catalyst for the stock price action, at least in the last 6 months.
Yeah, it certainly seems to be a good story in what otherwise has been, a tough time for the healthcare sector overall, although, things do seem to be, I suppose, catching a bit as far as the overall sector is concerned. No doubt we've seen Warren Buffett giving some of the insurers a bit of a look in as well. But I'm just wondering, as far as this story is concerned, and, you've given a lot of details as to, why the street seems to be cheering things today. But what does this tell you about, what investors are really paying attention to right now in this space?
Well, I think first off in this space, I think the insurance sector or segment of the healthcare sector has been really decimated because of policy uncertainty and reimbursements. Companies like Premier, Cardinal Health, these are companies which help optimize businesses, healthcare service businesses, whether they're clinical or hospitals or a small dentistry office, for instance. So these are companies that are trying to help mitigate costs, at least on a wholesale level. And then provide optimization software services for things like account reconciliation, bill payment, and so forth. Because most of the healthcare glut in terms of expenses really comes from an administration problem. So if you provide some technologies to help optimize business efficiencies, then companies like Premier, even Cardinal, will perform well outside of what's happening in the healthcare insurance space, which is a different animal altogether. They've got some political elements behind that. Medicare, Medicaid reimbursements, as well as, again, healthcare expenses, which are rising, and then these companies aren't able to pass on those costs.
Okay, got it. Thanks so much for getting us across to that, George. A really important story. Enjoy your evening, and we'll see you tomorrow.